All right, it's October 29th. I'm up over $1,100 on the day. I'm going to go over the trade that I took today, what went into it, why I took it. So let's get started. So I trade the 10 a.m. PO3. So when that 10 a.m. candle opens, I'm looking for price to manipulate and then distribute in the opposite direction. So on a bearish candle that looks like this, we open, we move higher, and then we distribute lower. On a bullish situation, we open, manipulate lower, and then distribute higher. Okay. Now, things that I'm also looking for at the same time. I'm looking for AMD. Now, that is when price accumulates, then manipulates, and then distributes. Okay. This would be a bearish example. This would be a bullish example. So, in this situation, we get an accumulation, which forms liquidity. We sweep that liquidity, and preferably we tap into some type of fair value gap, which respects, and then we get confirmation that we're moving in the opposite direction. And that's usually where my entry ends up, somewhat like this, something like that. Okay, and I'd like to pair this with the opening of that 10 a.m. candle or 2 p.m. candle, depending on if you're in the morning or afternoon session. Okay, and same thing for a bull situation. We generate sell side liquidity during the accumulation phase. We manipulate that, tap into a fair value gap, and then get confirmation that we're distributing to the upside. Okay. So now I'm going to go over how these factors played into today's trade. So right here is the 10 a.m. open with where this yellow line is. So right going into the 10 a.m. open, we could see that buy side liquidity had been swept. Okay. This high right here had been taken out, and we saw a reaction off of it. Now, if this swept this high and just continued to push higher, I wouldn't really have any reason to be bearish. But the fact that we had this deep pullback off of that liquidity sweep gives me a sign to start looking for a possible bearish entry. Okay. So once we made that push down, we started to accumulate internally. Now this formed buy side liquidity. This is the accumulation phase I was just talking about. Okay. So we see the liquidity is generated with these highs, and then right here it is swept. We sweep above these highs, and we tap into a bearish fair value gap. Okay. So now I have the accumulation phase, the manipulation phase. I just need confirmation that we are going to distribute lower. Also, on ES, this fair value gap was not tapped. So that forms a bearish SMT, which gives more confirmation that we could move to the downside. Okay. Now what I found for my entry, we had a bullish, it's very small, but we had a bullish fair value gap in here. That got inversed. With that inverse, we also closed below these order blocks here, which gave us our change in the state of delivery. So that was my entry, okay? I entered on this candle closure. My stop loss went at this high here inside of the fair value gap, the one that swept the liquidity, which is a high resistance point of liquidity. A protected high. Price should not trade back to this point. And I targeted this midnight open price. Now, another reason to be bearish was that this was low resistance liquidity. We see all these lows in here that are untapped. Okay, all this resting sell side liquidity is all low resistance. When we have situations where we get all this built up sell side liquidity, we like to see price run on that aggressively. Okay, so that was just more framework to set up this bearish trade idea. So profit target was at midnight opening price, which lined up with this sell side liquidity low, and that gave me around a 2.9 R for a target. Now we can see price push down nicely initially. Once these internal lows right here were swept, I moved my stop loss to break even. We had fair value gaps that were protecting my stop loss at that point. We could see this bearish one right here got respected, and price pushed down further off of that. Snagged that 2R right there, hit that low. So I went pretty light risk on this trade. I only risked around a third of what I usually risk because today's FOMC day, and this is the morning session. So at 2 p.m., we're going to have the FOMC news come out, and price typically is not in ideal conditions before that. So although this setup looked pretty nice, I wanted to take off some risk and not put too much on the table given that we could have poor conditions trading today. And this trade was mainly based off of the AMD setup. So just to go over it one more time, we saw accumulation. We manipulated that buy side liquidity that was generated. And then we distributed lower. Okay, right here is our accumulation. All right, let me mark it out. There's your accumulation. Manipulated above the highs. And then we got distribution lower. Okay, pretty clean, simple AMD setup based off of the 10 a.m. open, based off of a liquidity sweep, and we were able to grab a 2.9R. Pretty nice, pretty simple. And that'll be it for the day.